The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 18th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. We do not make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in right now, 877-927-6648. Internationally, you can call us at 727-445-1044. Of course, if you can't pick up that phone, you can send me an email, steve@tfnn.com. Inside that subject line, put radio show question. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Let's Show. Right now, the Dow trading down 95 points at 21,534. S&P is off 3.5 points at 2455. NDX 100 up 0.3%, up 17 points right now. She's printing out at 58.57. The Russell 2000 back 6 points at 14.25. Semis are off 2 at 10.97. You've got gold up $8, silver up 16 pennies, light sweet crude up 10 cents. Leading the charge here to the upside is Priceline. Dollar-wise up $34. Netflix up $21 or 13%. A little Fuse. Yeah, that Fuse is on fire. It's up $13 or nearly 8%. Amazon's up $11, a little over 1%. Google's up $10. Puma Biotech up 7. Lending Tree up 5. To the downside, Chipotle off $27. Another food scare in Virginia, I believe, making people sick. It's only one store, but nonetheless, reminiscence of a bad food operator. You know where that one came from. We'll take a look at that. Coherent Inc. down $10. Intuitive Surgical off 6. Goldman Sachs down 5. AutoZone down $5. And Tile Shop Holdings down 23% out there, up $4.70. First question that came in was from Don in the mountains of Georgia, asking if we could take a look at Hawaiian Holdings. That is Hawaiian Airlines. And Don would like to buy it at $45.95. So what say you? Those of you that are watching us on TigerTV, take a look at this chart with me. What do you think about $45.95? Now, the $45.95 area, it's fairly consistent with this is like a sideways consolidation that this equity is trading with. And you can pretty much see the box here. One thing that I'll give to you before I turn it off, Don, is the bottom of the TAS daily profile is $45.91. So if you did buy at $45.91, what you don't really want to see is a close below $45.95. Now, I would stretch that out to say, take a look at the most recent swing point of significance, where we saw a sign of strength, which was April 7th. Sign of strength came in the next day. That's how you like to see an equity come off of the bottom out here. And that, in fact, is what occurred back on April 7th. And then the next day, was it April 8th? I don't know. April 10th. So after the weekend, when it moved higher with 1.4 million shares. So you had volume of, on April 7th, of 589,000 shares. We're trading into that right now today with 488. So slightly more volume, or looks like it's going to be slightly more volume by day's end. A little bit lighter than that little breakout area, but in the bottom of that swing point, 45.45. So ideally you get to 45.45. It bounces back up about 45.91, the top of that daily box, and then boom, voila. Now, what Don is perhaps looking at out here, if we go turn off the profiles, those are the horizontal green and blue lines on my chart. Let me see if I pull this back further, and we can see if this has really been consolidating. Let's go ahead and get this right out here. Doing it wrong doesn't make any sense here. And I would have to say that the consolidation pretty much is in this little boxed range out here, right? And actually, we'll go up to about right here. So from about $60 down to 44. So that's a pretty nice consolidation area. And of course, this actually takes us lower than the 45.95 level, because this takes us back to this nice little bullish engulfing candle all the way back here from November 2016, around 44.27. So this could really be your range, Don. But you know what you'd like to see is some type of sign of strength off of the bottom out there, and either buy the pullback or just simply jump on the train at that point in time out there. So hopefully that helps you with regard to Hawaiian holdings. Now let's go to the general markets, try to figure out if we can figure out what they are communicating to us. So the Dow being up 92 and the NDX being up $18. Let's go take a look at the. What do we want to look at? Let's go look at the daily charts. I'm going to switch to a different set of charts out here. So we just look at the indices. And we'll start by taking a look at the Dow. I think we'll start by taking a look at the Dow. Here we go, as soon as we can find it. So here's what we know about the Dow. And this actually leads into a question that came from one of our denners as well, which was Mr. Z asking about if I could just kind of recover what I did last night during the segment with Tom about the Dow Jones Industrials and a divergence. Now, this is a daily chart that you and I are taking a look at. On this chart here, you're going to see a number of different tools to assist us with identifying tops and bottoms. Those could be wave counts, which in this case here, we're really in its third wave count. We know when we get to wave number 7 or G out there, that's where we can see significant declines. That's in fact what, or declines, period. That's in fact what took place back around June 20th as the Dow made that 7th wave move. And that was all the way from the Trump bump. That was from the low back. No, that was not. That was in April of 2017 out there when you start taking a look at those wave counts out here. We have some Tom DeMark systems, some Tom DeMark. Let me get rid of this here. We have some Tom DeMark counts out here as well. There's nothing that indicate with his system of counting that there is any kind of a top, but we do have price moving higher doing less relative energy. We do have a Stevie potential top in the Dow out here, and so we see price moving higher. Now the reason just price moving higher doing less relative energy means what? It means diddly, bo diddly to be exact out there. It doesn't mean a thing until bears get that string. I don't even know what that means out there, but it doesn't mean anything in this case here with price moving higher until you see a bearish reversal signal to confirm that the bulls and the bears, the way they communicate to us, that there is some type of top in place. Now, with regard to where price could fall to in the Dow, we just simply go back to, in this case here, we can use one of those Tom DeMark support lines out here, this little red dashed line, in about the 21,158 area. That would take you back into the swing point of June, looks like June 29th out here. So the Dow is giving us a message that it's tired, it's ready to pull back. That's the message of the Dow on the daily. Of course, it depends where it closes the session at day's end. And if it's below 21,581, that's its message. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So the request was, I try to do a segment with Tom most Monday afternoons around 3:15, and I always like to make those segments entertaining, factual, provide information so that you can say, that's something to think about. And last night was really no different. And it was really a follow-up to the segment that I had recently done with him a couple weeks prior, where we saw a market, the Dow specifically, by the way. Let me get rid of this slide here so I can tell you what we were looking at. Let's put the Dow up on my screen out here. And let me turn a few things off. And the conclusion that I had drawn, of course, it'd be easier for me to draw it when I get rid of some of the data that's out here. And I'll leave that open gap out there. But it was really talking about this out here, this little area out here. And the point that I had made was that this is not the way that this is with regard to a conclusion where many people are saying we're making a significant top. We're at the beginning of a bear market. And I can understand that thought process because during the last 70 years, we've seen a bear market occur at a rate of 1 every 5 years. Now, the last bear market that you and I went through, this gets kind of overlooked, quite frankly. It was in the S&P 500 specifically, was in May of 2011 when we saw a 22% drop from high to low out there. But the way that bear markets really get going, so let me come back to the slideshow. What bear markets really don't let you do is they do not give you a chance to get out. So remember the slide we were just, not the slide, but the data we were looking at before, we saw testing and testing and testing of the highs out there. Now that can form a top, a short-term top, but not the type of bear market top. And that's what I was really referring to is bear markets. When things get going to the downside, they don't let up. They do not let you out, which is really important with regard to what it is that we're going to take a look at. Now, as an example, just for this segment here, I'm not going to go through all of them. You can go back and do all the historical analysis, and you'll say, son of a gun, Steve-O's right. when the bear markets really get going, they do not give you a chance to exit. Here is back in the 1929 top, all right? So there's not, and you go back and take a look at each of them. Don't just, I'm not cherry picking here, okay? Here's 1946, here's 1966. Once it begins, it just keeps, it's like, it's the never, ever ending, ever ready battery, or something like that, to the downside. The energy bunny. That has run out of energy. The batteries are dead. So here was the slide where what the Dow had been doing is my conclusion was the Dow is going to get back and test its highs. Well, it did that on Friday, right? Because that was the normal pattern associated with not with a bear market. So just simply, in essence, really building a base, which I think is really all that the Dow is doing. We talk about on the daily chart having a bit of a pullback. It just would be pulling back into a support area potentially. Then there is a lot of the hubbubaloo, a lot of the talk about, but Steve-O, this is, I get a number of emails, but this is a year ending in 7. And this person says this, and this person says that. So isn't a bear market near? When you have bear markets that occur on average over the last 7 years, once every 5, point something years out here. We haven't had one since 2011. We're overdue for that. Isn't this the beginning of a bear market? Well, I actually went back a little bit further. My data goes back to 1896. And what I can tell you and share with you, this slide here just takes a look at the last 9. So I went back and, in fact, to take a look at the last 12 or 13 of them. But this one, we had what we'll call official bear markets in 2007, 1987, 1977, 1957, 1937. So you can understand where all the hubbubaloo comes from. But we didn't have one in 27 or 47 or 67 or 87. So in this case here, it was 4 out of 9. It was a coin toss, right? Flip the coin 9 times. Heads are going to get 5 or 4, and tails you're typically going to get 5 or 4. So that's like a 50-50. You want to go ahead and call a bear market on a coin toss? Come on, we can do better than that. You can do better than that. I can do better than that. Look, back in 1897, was there a bear market? The answer is no. In 1907, there was. It started in January of that year. In 1917, 10 years later, was there a bear market? The answer is yeah. It started in March. 1927, well, we covered that. The answer is no. The one in 37 started in March. The one in 57 started in July. The only one to have started in July. 1987 was in August. 2007, you know that started in October. There's a lot of hubbubaloo about July, and that this is where it's going to start because they all start in July. Wrong. That is not the case. In years ending in 7, only once have we seen it in this small list of the small group of 12 different since 1897 that you and I can go back and take a look at. But the deal is, seasonally speaking, the Dow typically makes a high in the July timeframe. So that is true. But with regard to years ending in 7, if I really went back and tracked it, you'd see that is not the case out there. Okay, so we've got that. But here's the deal. So there was, you got basically a coin cost with regard to that. Here's the key. The pattern that is present at the beginning of every bear market is where price moves higher and does with less relative strength. You and I look at this pattern on a nonstop, continuous basis for all different time frames to help us identify short-term, longer-term, intermediate-term tops or bottoms out there. And in this case here, back in May of 2011, where the S&P saw that 22% decline from top to bottom, when the bottom formed, it also formed with the exact opposite pattern where price moves lower, does with less relative weakness out there. And the key to this pattern, the key to every pattern out there, is quite frankly a bullish or a bearish reversal signal. Now, you really only need to learn 7 of them. I can teach you all of them, but you really only need to learn 7 because once you learn the bullish side of those 7, they have cousins that are the opposite side of the reverse, the bearish side of that. To give you an example, in 1927, no bear market here. There was no price relative strength divergent pattern. 1937, absolutely there was. In fact, when the bottom formed in 38, the exact opposite pattern, just like we were looking at in 2011. In 47, no bear market signals, no price relative strength divergent. Yeah, a sideways consolidation that was going on out there. 57, on absolute price moving higher, do with less relative energy. Bears show up, nice little bearish engulfing, bear sash candle. out there. In 67, no pattern that existed. This is a weekly chart that you and I are taking a look at earlier. So you got to keep your head in the game here, and that means keep it in the time frames that we take a look at. 77 bear market actually began in 1976, so we'll just kind of stretch it out into this January 77. So I went ahead and just gave the bears the benefit of the doubt out here. So really it started in October of the prior year, but that wouldn't be a year falling in sevens, would it? Okay, in 87 here, you can see the 87 bear market, right? Before the crash, this signal was already present, right? The warning signal was out there on the weekly chart, on the daily chart, on the monthly chart as well. 1997, no bear market signals that are out here. 2007, absolutely bear market signal, both at the top and the bottom in 2009. And so the question is, hey, where are we today on the weekly chart? And that takes us right into the break. Is that not timed just perfectly, just to keep you in suspense so that you would come back? I would never do that. I would do that, but I won't do that. Here we are on the weekly chart for the Dow. The week has to really get horrible to give us a confirming signal. We're not there as we speak at 1:26 in the afternoon. Right back. Only Tuesday.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So I didn't keep you in suspense. I went ahead and gave you the information, which was Friday. This Friday is going to be an important day when we took a look at the Dow weekly chart because of the potential pattern. Here's the potential pattern. Here's where we are in the Dow right now. We can see prices moving higher, doing with less relative energy until a bearish reversal signal forms. This doesn't mean diddly. You and I covered that. If we take a look at the example, last time we saw this pattern here on a weekly chart in the Dow was when the bottom formed back in 2016 out here. And the cavalry arrived, formed a nice little hammer candle. You can see that right here. That's during it looks like the week of January 22nd or so. Prices moving lower, doing less relative energy. Nice bullish hammer candle, which was what was nice about that was that was going into a hammer candle from August of 2015 on a weekly basis. We know the hammer candle tells you and I that a market is trying to hammer out a bottom. So you like to see when multiple patterns come together out there. If, in fact, we get a relatively weak move into Friday out here, well, and we need to see a close below the open of last week. That was 21,381. We're at 21,540. So that would be a number you'd want to pay attention to. That would give us a bearish reversal signal inside of the Dow Jones. And the reason why that is important, if we put a couple of different things together, if we just look at the normal cycle work that you do, that you work so hard on, and you've taken a look at the last 85 years worth of data for the Dow, you know that July 21st, which happens to be Friday, which then coincides with the weekly chart of the Dow, if in fact something is going to get going in a pullback or retracement, if it's going to begin, now is the time to generate that signal for us. And that says that there is the potential that, in fact, the markets could move lower into October 13th to be exact. Now, we don't really want to be exact, but it is nice when this works out exactly. What we know is we've got a forecast. We've got a set of tools that lets us know what to keep at least one of our eyes open for. This is like living near the ocean, which I do, and I get these alerts that tell me when the undertow, when it says stay out of the waters. Well, if we got a bearish reversal signal, there would be a signal going out, say, stay out of at least these waters, the Dow's waters. I don't know if it's going to say the same thing with regard to the NDX 100, the S&P, or what have you out there, but in essence, that's what we would be looking for. And if we don't get that bearish reversal signal, that just says just to continue to keep your eyes glued on what's going on out there. So for those of you folks that think I am a super bull, that's a lot of bull out there. What I'm super about is taking a look at all these. See, we can do better with regard to understanding when the markets make highs or tops that are significant enough that you want to maybe take some type of protection out there, right? In 1987, if you knew this pattern, would that have assisted you? In 2007, if you knew that pattern, would that, you know the answer to that. And this is not artificial intelligence. It's just, these are just normal patterns that are out here. And they're playing, boom, right in front of our eyes out there. They at least form at the top of every type of downturn out there. Do each one turn into a significant downturn or a bear market? The answer is no. Then we have to start coming back and falling back to other sets of tools, testing swing points, things of that sort out there. We just simply have to take a look at other areas of support, such as this little rectangular daily box inside of the Dow. If that gets broken, then we start taking a look at open gap down around the 20,857 level inside the Dow. That would become a natural target of a little consolidation. This is not really a consolidation that we're in right now, but we do know that the bottom, this little bottom here that was formed back in June 29th and was tested again on July 11th, it's an area to be paying attention to. Okay, so Mr. Z, I hope that answers your question. And obviously, we had more time than we did during the quick 6 minutes or so that I do with Tom to just throw that information out there. So back to today. Today's close will be important with regard to the Dow. Now, inside the NDX 100, as we flip back to it as an example, we have the complete opposite message. Now, by opposite, meaning we do not have any kind of bearish signal inside the NDX 100. As we pull this over here, this is trading higher. So this continues to trade higher. It wants to go take out its highs, which it will do. And the question is just a matter of when. Now, if the NDX were to close below 57.79.54 to be exact here, 58.64 right now, then it would pique up my interest. But at this stage of the game, the NDX 100 says it wants to continue moving higher. In fact, this thing could move higher for well over another week out here. So it's kind of poo-pooing what we just took a look at inside of the Dow. But each market is different, so we'll take a look at each market separately out there. Now, a couple of questions that have come in because I probably belabored this market for too long out here. One question was, could we take a look at Johnson & Johnson? So if we take a look at Johnson & Johnson for signals out here, it's having a nice day. Very nice day out here. In fact, now it tested a swing point from July 11th. That had 3.7 million shares. It's come off that area with a little bit of a vengeance. July 18th out here, as we take a look at it, that's today. No, today's the 19th. Yeah, no, today's the 18th. 5.7 million shares thus far. So let's go ahead and turn. Give me 1 second here. Let's go ahead and turn on the market profiles. See what kind of information you and I can glean out of here. We'll turn on both the weekly in green and the blue daily today. And we're seeing the close above 133.34. It looks like we will. 133.34. That says to us that's the top of the daily box that formed 4 days ago. That would then communicate to me that Johnson & Johnson is going to go back and test the swing point high, which is about 137 even. 137 even Steven. From June 22nd. Now, what's the volume out there? 7 million shares. If you're coming in with lighter volume, probably just test it, rejects it, and we continue to see just a sideways-ish type move between 137 and 131. So that was for Dave in Germany. Dave, let me know if you need any more information than that. Had an email request that came in, so let me go to that, and then we'll go take a look at platinum. This one is from James. James says, currently own 100 shares of JP Morgan. Would like to know what you think of it. I'm looking at least holding for at least 6 months. So JPM is the ticker symbol. Now, what we don't know is where James got in on this equity, but J.P. Morgan gave you the ultimate of buy signals back on the, this was one of those textbook signals out here. This is quite a while ago, but anytime you see an island top or an island bottom, such as the one that formed out here, in the case of J.P. Morgan, it was the island bottom that formed out here February 11th. I mean, it was a beauty. And that was at the price range. That trading day went from a low of 52.50 to a high of 53.91. You're at 91.38 as we speak right now. So nice. So I don't know when you're in. So the 6-month question, let's just take a look and try to answer the question, which says, would like to know what you think of it. Again, it would really depend upon where you're in. But let's just take a look at a couple things. Let's look at our TAS daily boxes out here. Prices below that. That's not a good thing. 92.15. When I say it's not a good thing, it just simply means it suggests more of a pullback. This had made a 100% move by testing the high from March 1st, which had 24 million. That was tested with 16 million. Too light to bust up. Let's try to figure out for James where J.P. Morgan is pulling back to.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So let's go ahead and finish out, take a look at J.P. Morgan. So we know that J.P. Morgan tested its highs out here. The highs going back to March 1st, 2017. Again, volume of 24 million shares out there. And it was tested with, on July 6th, 16 million shares. So not enough to really bust them to the upside out there. And so that says, okay, I'm not going to bust them up. I'm going to go ahead and pull back. There was no real other signal, no bearish reversal signal or anything along those lines up at the high. Just simply couldn't bust out a prior swing point. So now what price is doing, what price did today so far, is it pulled back to a breakout area. Now, breakout really defined in this case here by this nice little gap to the upside between June 28th and June 29th. June 28th, the high was 90.07. The low on the very next session was 90.31. So there's a little gap. The actual low today is 90.32. No surprise there. So price in JP Morgan is pulling back with light volume, actually, because if we take a look at the breakout session, it was really from June 29th and 27 million shares. And you're pulling back with 8.9 million shares. So if you're asking me, what do I see? I see that JP Morgan is pulling back with light volume. That doesn't mean that it can't go down and test 90.07. And if it does, it says, if we just take a look at the Japanese candlesticks for signal, it says 89.13 is where we saw that little shooting star. That's the opposite of that hammer candle that you and I looked at when we were looking at the weekly chart for the Dow. That is a level of old resistance that perhaps now could become new support. If we go ahead and we put up our TAS weekly boxes, another excellent source of information, this would say 88.38 would be the level that would act as support. So again, I don't know when you got into the trade out here. I don't really see this thing pulling back substantially or significantly out here. Right now, price is coming back into a level that it had broke out. So it looks pretty good to me as we speak right now. So I hope that that assists you with the J.P. Morgan. Now we had a request to go take a look at platinum to the long side. And to do that, we're going to go take a look at our TAS market profiles. And we'll go take a look at, see if I've got the platinum contract up here. So I've got it as the October contract. Is that what it is that you are trading, Mike K? And as we take a look at platinum out here, we've got the 60, the 240, the daily, and the weekly profiles for us to use to gather our information from. Let's just start from the weekly out here. Weekly doesn't provide us with a whole heck of a lot of information. The daily does, Mike, and the daily looks nice. So you're long, and what you like about the daily and what you would like to see Platinum continue to do is to stay above the daily profile high. 921 is the number. You're trading at 929 and change out here. The 240-minute chart, which has been making new market profiles ever since the bottom formed, each of those profiles above the prior one. Mike, what you like is the current profile that formed out here began forming at about 8 o'clock, 6 o'clock last evening. And what's nice about this profile is that center of the box, the cyan color at 924.60, much closer in proximity to 920.90. Now, what that says, because if you take a look at the top of the box, 937, that says that this price area between 920 and 937 is or should be controlled by the buyers, should be controlled by the bulls out here. Now, it doesn't tell us what's going to happen at 937.40, but if it did close above 937.40, then that says, boy, that brings open the only other profile level established right now that you would take a look at for a price target would be 980.50, and that is the bottom of the weekly profile out here. So everything looks good. 60-minute, by the way, that looks good. That's green. Green shoots, that's bullish. So it's just the 240, of which the price area, it is the bulls, the buyers that are in charge of. Now, what that also communicates to you and to I and to everybody else out there is you get below, we said 921 on the daily. The 240 is 920.90. That sounds like 921 to me. And then the 60-minute is 925. So, Mike, what we do know is if this were to close below 921, it opens it up to explore 908 or even 899. So watch that area to the downside as well. And you are welcome. Now, that begs to have us answer the question. It is that time. It's 1:47. You know what that means. It's time to answer the question. Hey, Steve-O, what's the yen doing? Well, let's go take a look at it. This time around, what we're going to go look at is we're going to go look at the yen futures contract. So we're going to go take a look at the September contract for the yen. We're going to do it on those same time frames out here, 60 minutes, 240, daily, and the weekly. Although on the weekly side, we really don't care. There's not a whole lot of information. It's the daily chart that what we want to take a look at is what in the Sam heck is going on out here, because this could influence what you might do with gold, influence what you might do with the treasury bonds out here. Might influence what is going to happen next. Now, what the yen did, it fulfilled its duty by getting up close to the 89 cent, 89.85 level. It didn't actually get all the way up there. It got up to a high of 89.78. You know what, folks? In our line of work, that is close enough. Now, just the opposite of what Mike and I were looking at a 240-minute time frame for platinum, we have the exact opposite on the daily chart for yen futures. Notice how that cyan color at 89.65 is much closer to the top of the box, 89.85, than it is to the bottom at 88.48. That tells us that this price area that we are in is really controlled by sellers out here. Now, that could be a problem. That could be a mucho grande problem if, in fact, it is sellers in control, because this would say the yen is going to go ahead and start weakening. In this case, it would start moving down to the 88.40-ish type level out here. Now, how are we going to know if that happens? Well, from an hourly standpoint, we have a brand new market profile that formed. And I do mean brand stinking new out here. So 89.43 is the key level to watch. Now, the way that this profile formed, it is bullish from the standpoint that it formed above the prior 60 minutes. That says 89.73 could be resistance. The center of the line is really in the center. So we don't know in this tug of war if it's the bulls or the bears that are really in control of this price area. What we do know, if in fact price closes below on a 60-minute basis, below 0.8943, that could be a problem. And that would then just help to solidify the message of the daily. Now, if that occurs out here, because of the directional correlation that exists between the yen, between bonds, between U.S. treasuries, and you don't have to believe me. All you have to do is believe your eyes. And by doing that, we would just go take a look at the 10-minute correlation chart. That's going to punch up on our screen out here. And we're going to see that directional correlation that exists out here. When we see one red bar and we see another red bar, bar, we see a green bar, we see a green bar. I mean, it is uncanny, except for you and I and about 2 million other people that have noticed this. But until it goes away, we have to assume that it will stay out there. And so then that says, okay, what to do about the 30-year Treasury. That's really the only thing out here that is the fly in the ointment. And you know how we like to use ointment out here. It just kind of helps the bones just kind of move, and groove out here. Well, in this case here, with regard, who's telling us the right story? This is the true game of liar's poker. Is the yen telling us the story? Is it the bonds that are telling us the story? Is it gold telling us the story? 153.36 is a key number for the 30-year Treasury. Right now it says it's just flipped to the bullish side. But will the yen cooperate? We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 72, S&P down a point. Let's go to Cleveland and speak with Tim. Tim, thanks for calling. Thanks for holding. How are you doing today? How's your summer going?
Hey, doing pretty good. Just chilling out here. Got a lot better temperatures here, and I think you all got down there. Are you in Florida? Yes. I don't even know, Steve.
Yes, I am. I'm in South Florida, and we don't go out of the house this time of year until the sun goes down.
Yeah, well, we just broke the 80 mark today. I think we got up to 80. So.
Oh, my heart is bleeding. Hey, you want to take a look at Annalie capital management, right?
Exactly. You led me really well on that TWO the last time I spoke to you, and I'm thinking of thinning out on this one as well. I thought maybe you could do a similar great job again.
Well, so yeah, here's the issue that you and I have to contend with, or anybody does, on this ticker symbol, right? They put more shares into the marketplace. Looks like that's what they have done, another public offering of 60 million shares or something like that. So that is one of the things that is impacting the price on this. We just don't know. Is it going to find support here at 1176? I mean, if we didn't know that and we were just trading this from a technical standpoint, we would say that this is going to make a trip all the way back to the most recent swing point, which is May 9th, which is somewhere between the 1119 and 1148 area. If it were to head back there, the bottom of its weekly box is 1134. Would that be reason for you to bail another 30 cents or so?
Yeah.
You would?
Yeah, I mean,
okay.
I'm pretty close to pulling the trigger because I honestly, when I was looking at this thing, it kind of looked like it had turned even before the announcement came out. Do you see that too?
Well, it most certainly did gap to the downside on June 28th, but the volume there was only 8.6 million shares, and that certainly is a line of resistance. There's no question that gaps are like breakouts or breakdowns, and this thing had broken down, so to speak, and created that gap on the trading day of June 28th, and price came back up and tested it and rejected it. So now what we know is that the next level of resistance, or support, I should say, really for this, we won't know if it's a level of support, would be that May 9th swing point. I just wish we didn't have that other piece of information that some of the decline today, or most or all of the decline, is because they're just simply out there raising cash. Sure, I don't know enough about their holdings. I know they are in the real estate market. I know they've got mortgage-backed securities. Don't know enough fundamentally about the company, but there's no reason yet to suggest that it wants to do anything other than continue to pull back, and that 1134 area, Tim, would be the spot that I would be looking at. I don't know.
Okay.
Because of the information, I cannot say with certainty that that's what it wants to do. That's my only hesitation. Maybe you wait until tomorrow. Just
Gotcha.
Continue to see. I don't know. But you've got to make the decision out there. This one is a more difficult call, in my opinion.
Okay, if we make the assumption, that things are going to be heading south. I mean, where would you see maybe a re-entry point if it did go down all the way down there to the low $11 mark?
That one's pretty simple. What you'd like to see it do is you'd like to see it come into the area of 1119 to 1148, do a less than 12.7 million shares. That would be the equation that you would look at. It would either be that, or you would also then wait to see some type of bullish signal, because this would then complete some form of A to B equals CD to the downside. And when you see that, you like to see some type of bullish reversal signal. So that's what I would be looking for. All righty?
Hey, thanks a lot, Steve.
You bet. Enjoy that warm weather, 80 degrees in Cleveland. Folks, stay tuned. David White, our favorite polar bear, he's going to be up next. Tom O'Brien from 3 to 5. Andy Heck from 5 to 6. Have a great Tuesday. We'll see you on Wonderful Wednesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching TigerTV.